Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about BOYD Gaming Corp. Quarterly Report. BOYD Gaming Corporation offers a diverse range of businesses and services across the United States and Canada. These include casino operations, online casino gaming through its subsidiary. BOYD Interactive Travel Agency services. These segments cater to different markets, from locals in Las Vegas to online gamers, providing a comprehensive suite of entertainment and travel options. BOYD Gaming Corp stock price surge. A year of strong performance over the past year, BOYD Gaming Corp (BYD) has experienced a significant increase in its stock price, surpassing 15.08%. This surge can be attributed to several key factors that have contributed to the company's strong financial performance. Consistent strong earnings reports have been a major driver of the stock price increase. The company consistently exceeded analyst expectations throughout the year, with record-breaking revenues and earnings per share (EPS) in each quarter. The sale of its FanDuel equity stake for $1.755 billion also provided a significant boost to the company's financial position. In addition, BOYD Gaming has demonstrated a commitment to returning capital to shareholders through strategic capital allocation and shareholder returns. The company announced an additional $500 million share repurchase authorization and increased its quarterly cash dividend to $0.18 per share. The company's property developments and operational strength have also contributed to the stock price increase. The Norfolk Casino Project, a $750 million casino and resort development in Virginia, has moved forward with plans for a temporary gaming hall and a permanent resort. The online segment growth has consistently shown strong performance and growth, with EBITDA guidance for 2025 increased to $60 million. The combination of these factors has led to a substantial positive movement in BOYD Gaming Corp's stock price, reaching an all-time high closing price of $87.38 on September 29, 2025. The primary drivers of revenue growth or decline for the company can be summarized as follows. Revenue growth is primarily driven by online market access agreements, gaming wagers, management fees from Wilton Rancheria agreements, and the acquisition of BOYD Digital. Additionally, increases in online reimbursements revenue, Sky River casino management fee, and gaming revenues at various segments have contributed to growth. On the other hand, revenue decline can be attributed to a decrease in online revenue due to market access agreements and room revenue decline at Las Vegas locals segment due to hotel occupancy rate and average daily rate declines. Net income and profit margins. A shift in fortune. The financial performance of a company has undergone significant changes over the past year. For the 3 months ended September 30, 2025, net income increased by 7.2% compared to 2024, indicating a positive trend. However, this growth was not consistent across all periods. The 9-month period saw an increase in net income of $1,292.6 million. Profit margins also experienced fluctuations. For the 3 months ended September 30, 2025, profit margins increased by 0.8% compared to 2024. Conversely, for the 9 months ended September 30, 2025, profit margins were negatively impacted due to a decrease in operating income. Several factors contributed to these changes. The reduction in gaming taxes recorded as gaming expense and the increase in online market access agreements revenue share positively affected net income. Additionally, the gain on sale of equity interest in FanDuel was a significant contributor to this growth. However, the decline in operating income had an adverse impact on profit margins. In conclusion, while net income experienced growth, profit margins were negatively affected by decreased operating income. The company's financial performance is influenced by various factors, including tax and revenue changes, which will continue to shape its future prospects. The company's financial performance indicates a consistent generation of positive operating cash flow over the past 2 years. In 2025, the company generated $701.4 million in operating cash flow, while in 2024 it was $695 million. This trend suggests that the company is effectively managing its operations to produce a steady stream of cash, positioning itself for long-term financial stability and growth. The company's debt level has experienced fluctuations over the past year. Initially, long-term debt decreased by $1 million due to the extinguishment of a Term A loan. However, this decrease was followed by an increase of $1.291 billion from September 2024 to September 2025. The weighted average debt balance also saw a significant decrease of $549.6 million for the 3 months ended September 30, 2025. In terms of interest expenses, there were notable changes. Interest expense decreased by 30.7% for the 3 months ended September 30, 2025. Additionally, the loss on early extinguishments of debt was $1 million due to the write-off of unamortized deferred finance charges. The blended interest rate remained constant at 6.2%. Overall, while there were some changes in debt level and interest expenses, they do not appear to be significant or consistent across all periods. The company's financial performance varied across different segments and regions. The downtown Las Vegas and Midwest and South regions showed improvement, with total revenues increasing by $1.2 million and $16.5 million respectively. The online segment also performed well, with a significant increase in total revenues of $24.3 million for the 3 months and $90.8 million for the 9 months. In contrast, the Las Vegas locals segment experienced a decline in total revenues and adjusted EBITDA. Additionally, the North Strip region may be struggling due to plans to demolish a property in the Midwest and South segment. Management is committed to increasing shareholder value through strategic initiatives, focusing on revenue growth, customer loyalty, and a strong balance sheet. The company plans to diversify its cash flow, expand offerings, develop new properties, and make strategic acquisitions. Additionally, $250 million will be allocated annually for property refurbishment and maintenance. Overall, the strategy aims to drive long-term success through prudent financial management and strategic investments. The company's financial summary reveals 2 key aspects of its shareholder return strategy. Firstly, the company has chosen not to pay dividends to its shareholders, instead opting for other methods of returning value. Secondly, it has implemented a share repurchase program, which involves buying back shares from the market. This indicates that the company is prioritizing capital allocation and shareholder value through share buybacks over dividend payments. That concludes the financial summary for BOYD Gaming Corp. Feel free to comment below, and I will be happy to answer them when possible.